You've had the right type and the right amount of life insurance during the key stages of your life. Well, now you're past it. You no longer need the life insurance. What do you do with your policies? Well, it depends the type you have and your financial goals. I've got a real life planning scenario, that and more coming up. You need life insurance to fund your unfunded goals, things like paying off a mortgage. If you pass away, when you still have that mortgage, would your spouse or loved ones still be able to carry that? Would they be forced to sell the house? Oh, you wouldn't want that to happen. What about educating your kids? If they're still dependent upon your income, right? Then income replacement, saving up for retirement. Would your spouse be able to work and save up enough? And so those are just a smattering of the reasons why you might need life insurance, and you want to quantify, figure out, well, what's the right type for you and what's the right amount? Well, now let's say you've gotten past all those goals, right? The mortgage is paid off. The kids are out of the house and they're doing well financially, and you have saved up a significant amount. You're ready to retire. You could almost argue you're basically financially independent. What do you do with your life insurance then? Well, it can be an emotional decision. I've actually talked to a lot of people where we've said, yeah, you're financially independent. You really don't need the life insurance anymore. And they've gotten emotional because they've thought, you mean my life doesn't have any financial value? And oh my goodness, that absolutely not. It's just that mathematically, do you need to continue to pay the premium such that if you passed away, it'd be emotionally just devastating. But financially, you guys would be okay. In that situation, you've reached financial independence and you still have a life insurance policy. What do? You need to have clarity, confidence, and maybe a little creativity as well. Let's go through two different scenarios. The first one is a real life planning scenario we're working through right now, and it's where early on in this individual's career, they had a different financial professional sell them, and I'm using that word intentionally, a universal life insurance policy, a permanent policy. The reason why I say that is our team of financial planners took a look at their situation and said, you don't have a permanent life insurance need. And yet it was temporary, and yet you've got permanent insurance. And so you've got this universal life insurance policy. It's cost you 3 to 4 times what a term policy would have. And now there's this cash value, this kind of savings account built up that is earning some interest, but it also has high fees. And you no longer need the life insurance. We've done the analysis. You no longer need it. Well, then what do you do? What are your options? Option number one, you could cancel the policy. You could cancel that policy, and again, you'd want to have that full conversation that, well, if you cancel the policy and then got a diagnosis the next day, would you be okay with that? If you cancel the policy and then passed away, would your spouse be okay with that? Family be okay with it? Everyone would need to be on board because no one knows, right? No one knows the future. But if you said, yeah, no, we'd be fine with that, blah, 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 let's cash it in. Then you're going to want to analyze, well, are there any tax consequences? With a whole life, universal life, variable universal life, those permanent types of policies where you're getting some cash value back, you're going to want to analyze, are there any tax consequences and how can you prepare for them? But that's option number one. You could cash it in. That's not what we're recommending in this situation because these individuals, even though there wasn't a life insurance need, there was a long-term care insurance need. And that's where we're exploring 2 other strategies as well, where instead of just cashing it in, we're looking at doing something called a 1035. A 1035, that's a transfer of the cash value of that life insurance into one or two other tools. And so one is looking at another life insurance policy that actually covers long-term care risk, okay? Where you have a life insurance policy that has a long-term care rider, which means if you qualify and are unable to do 2 out of the 6 activities of daily living or have cognitive impairment, your life insurance death benefit could be used to pay for home care, assisted living, or nursing home. And if you end up using up all the death benefit for that reason, then okay, that you used up your policy. But if you either don't need the coverage for long-term care, you never needed to go to a nursing home or needed at-home care, that sort of thing, or there was some residual death benefit left over, when you pass away, then the death benefit is paid out. And you might say, well, we don't really need that, right? We don't need the life insurance. I know, but in this situation, they really needed the long-term care insurance. Their existing policy doesn't offer that. So a 1035 exchange, that's a non-taxable transfer of transferring that premium, the cash value into a new policy that offered this additional feature. And then the third option with this universal life policy, third option you could consider is, again, if there's a different risk or a different goal that you're trying to achieve that another insurance tool could accomplish, you could 1035 this policy into that other tool. In this instance, it would be an annuity, where that annuity would offer some long-term care insurance protections or would offer some guaranteed or fixed income. So if you've got a life insurance policy you no longer need, and it's a permanent life insurance policy with cash value to it, you could cancel it. You could 1035 it into another life insurance policy that has features that are more appropriate for your needs, or even another insurance tool, investment tool, that has some other structures or features that help you with your financial life. So that's option number one, or that's scenario number one. Scenario number two, you've got a term policy. You've got a term policy maybe that is still a 30-year term policy that maybe isn't going to mature for another 5 to 6 years. And yet here you are today, where you've done the analysis to say, I'm self-insured. We're financially independent. We no longer need this insurance. Then your options are to cancel, keep, convert. Cancel, keep, convert. First is you could, with that term policy, even though you have it guaranteed for that 30 years or another 5 years or whatever in this scenario, doesn't mean you're forced to keep it that long. And you can either reach out to them, either by phone call, fill out a form, send in a letter, something like that, saying, hey, we're going to cancel this policy. Go ahead and refund any unused premiums. And by the way, I'm not going to pay any future premiums. Or you can just stop paying it, and then they're going to send you a lot of nasty letters. Hey, your policy is going to terminate, blah, 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 but you want it to terminate. So you can just cancel it. And the benefit of doing so is you no longer are renting that policy. That's what term insurance or temporary insurance is. You're just paying rent. You're renting the coverage while you need it. Well, no longer need it. Stop paying the rent and cancel the policy. That's one. Two, a lot of people say, I know I'm financially independent, but emotionally, if something happened in these last few years before the policy terminated, we'd be devastated, right? And I don't know if I'm going to get a diagnosis or something like that. So you know what? The premiums, it's a term insurance, the premiums aren't that much. We're just going to keep the policy. Yeah, I mean, that's okay as well. You certainly could do that. And then that could lead to number three, where you would have the option to convert the policy if your term insurance has a conversion option, conversion privileges. And I hope they do. That's one of the qualifications that we look for in term policies. And you might say, well, why would I convert my term insurance to a permanent policy if I really don't need the life insurance to begin with? Well, again, going back to the earlier scenario, there might be a different risk or a different goal that you're trying to accomplish now that you're financially independent. It could mean, well, we're financially independent, but we'd like to leave some tax-free inheritance to the kids or family members, maybe to a church or to a charity. Maybe you can convert and add a long-term care rider. Maybe your term policy already has one where you can convert and cover that long-term care risk. It's at least an option you'd want to consider before you just go ahead and cancel it. So those are just three options that you could explore with your life insurance policy, whether it's a permanent policy or a term policy, if you reach the point where you say, I still have this life insurance, but I no longer need it. In any scenario, these are big decisions. Clarity, confidence, creativity is needed. You got to work with your CFP on that. If you don't have a CFP on your team, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with a K, wisemoneyshow.com. You can find us there as well, or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.